Good morning. Please be welcome to the presentation of results of this results, and you can access this video conference on YouTube, and the presentation is also available for download. We would like to inform that all the participants will be only watching this video conference during presentation, and then we have a Q&A question. And before we go on, I would like to reinforce that the prospective declaration has as a basis the beliefs of Vittia and the current information available for the company. Those declarations could involve risks and uncertainty because it's for future events, and so depending on circumstances could happen or not. Investors, analysts, and journalists should take in that the events related to that could do that the results would be materially different from the declarations. We have in this video conference Mr. Wilson Romanini, CEO, Mr. Alexandre Friso, CFO and RE Director, and Henrique Ferro, PDI Director. I would like to pass the floor to Mr. Wilson Romanini that we start the presentation. Please, Mr. Wilson. Good morning, you all. Now we are going to present the results of the second trimester of, we have a gross revenue about 1.7 million. Is 29.74 less than 22. We got 66 million in second trimester, 25% more than first semester of 22. So the bio register and 55.1 million in the first trimester, 25.8% plus. That's aligned with the work that we are developing here in Vittia, wanting to have a great participation in the world of the biological products in general. The net revenue amount 72.8 million, 53.6%. It's a very stock market. I'm going to explain that before. And then when take a look at the semester, we have a decrease of 29.3%, what represent 23.7 billions. Second three, and 2 million positive in first semester of 22. A very important point that I want to show, we always have a weak first semester in the previous year. And the 22 and 21 is not usual. We are going to talk about that. In second trimester, 83% less regarding the first semester of 22. CapEx, it's the total, and 2 million in the first semester of 2023. Our CapEx to have this process of increasing of production, it stayed 22.5% less regarding 22 and 23. The first semester, 23.7% smaller. Talking about the performance, as I mentioned previously, we have a very unusual year in 23. It's interesting that we always had smaller first semester and the second semester have more results. So it's a concern of the rural farmer regarding the costs of the crops. So we see that that's going to be better because we are going to have orders that we have orders from July and August, 60% higher than the last year. When we talked about risks and opportunities, we have a scenario that's very interesting in the macro. The profitability stays to the farmer in all the harvest. It's a little bit harder, but the expectation is positive ahead. We have a good expectation for a good harvest, and the farmer is very planning to adopt new technologies, mainly when we talked about biological products. So that's linked in what Vittia is being working with. As I mentioned, we are still intense in the platform, investment in our R&D. It's a very important point. It's a year that we achieved new clients, a work that we made in the past, 21, 22. We have a new portfolio of clients. The increasing of our company, we are on the rural areas to give support to the farmers, and each moment we're developing to have a robust portfolio to deliver the performance that the farmer needs. Now I give the floor to Alexandre Friso. He's going to talk about the numbers. Good morning. Talking about the sales performance, we have a decrease in all the business segments. In the defensive defensive biological pesticides, we had something different in the semester accumulation. So I would like to highlight mainly the lines of commodities, the minor ones, and the industrial products had something worse than the average of the company, because beyond the volume, those lines had a price issue. So when we compare the average price of the first semester and second trimester with the previous year, we have an average price that's lower. That's very clear when we take a look in our NPKs, the raw materials that comes from importation. So we had a decrease in the order of 70 or 80%. So that's something that suffered more. And thinking about in the year are the lines that we know that the price is going to impact of we are going to have in the beginning of the year. The foliar fertilizers and inoculants do not have this price issue. So this decrease, we understand that's more result because they postpone that the season is other. So that's the focus of the company. So we expect to reverse that in the second semester, and the lines that we have commodities, we want to deliver a growth of volume, but because of the revision of the price, we are not going to have a nominal growth. In the next slide about the margin, we have a decrease in the margin of foliar fertilizer industrial product in the trimester and the semester. This decrease, it's because the industrial products, because we have the composition of these two segments, the foliar fertilizer line, when you take a look at that separate, we have a lower margin, is almost stable. As I mentioned, those products are the ones that more suffer because of this market reversion, mainly because of the price. The biological products had an atypical behavior, and that's because of the mix. We had a mix of products with more values in the trimester, and we also had a closure of the semester that's inferior. When we take a look, the not counting, we compare the products, we are keeping a very similar margin to the previous year. We believe that there's not a perspective to close the year not with a decrease or increase of margin in the lines. We could have results, consolidated results with some variations that because of the mix of the products that could have a better performance. And in about the soil micro, we had a decrease also. It's a commodity line, but we have a decrease. It's a reflection of the not because of the fixed price. And in the part of soil conditioner and organic minerals, we are facing a challenge linked to what happened in the market of NPK with because of the price, and we are suffering in the past trimester. We suffered when the price increased and we cannot cover the portfolio. And with this decrease of price, when we had at the end of the last year, we had some clients that pay the order, so we had a expense stock and uncovered. We believe that the revision is going to happen in the second semester. It's a irrelevant volume, but we see that the sales are increasing. We don't have expensive stock that's so relevant that could impact the last semester of the year. In the next slide, we still, besides the semester, with the reduction of incomes, we are still believing a good year, in a good perspective, in a long term to the company. This way we are still investing in the company, in our commercial effort, our sales team, the management improvement, and the part of research and development. So we'll have a growth of 14% in this semester. The trimester had a smaller growth, but it's a seasonal thing. It's not linked to any kind of reduction or strategy of our to decrease our plans of growth. Our EBITDA, adjusted EBITDA compared to the semester had a reduction of 83% because of the reduction of incomes. The gross margin, we had something add, but with the decrease of the incomes volume, our SDNA had something important, because this trimester has a smaller number of sales. So the second trimester historically is the one that we sell less, because we have this harvesting in between. We do not have profits. The last year we have an atypical situation of an anticipation of orders and anticipation of incomes because of the delivery, because of the war, that they are afraid to not have the goods. So this year we had a change on this scenario, and I think that's not something should got back to the historical pattern. We left a way to the opposite way. The farmer this year is delaying the orders and the deliveries than the average, historical average. So that's something different because of the season. The capex, we are having our investment plan. We conclude the second phase of the biological plants, which were our solid fermentation, doubling fermentation. In this way, we reviewed our planning to our biological plants, increasing the total capacity that we had 9 million of liters. And in the second phase, we reviewed the capacity 5 to 6, and we have some adds in the investment part in the second and third phase. The positive news in this trimester, we had a very healthy cash flow. It's a result of credit policy well executed. We had a level of debt that was very low compared to the previous years, especially this year where we had a delay of the commercialization of the harvest 22-23, and we management our client portfolio, giving credit, and we had a cash flow that's higher than the last year, achieving a position that's very comfortable. We kept we had because of the reduction of our EBITDA of the previous 12 months, we had a reduction of 26% comparing to the same periods of last year. In terms of financial results, we have financial less negative, and we have two reasons for that. The first one is the weight of the income that comes from the AFP, that in 23 was higher than 22, is because of the rate. It was substantial from one semester to another, so with less taxes, lower than that. In the parts of income tax and social contribution, it's higher because of the prejudice that we have in the first trimester. in a prejudice at the end of the trimester of 14 millions of reais and a little bit 2 million reais. Now I'll give the floor to Henrique to talk about of R&D. Good morning to all. Vittia, stay strong in the investment plan in research and innovation. And in the first semester of 23, we accumulated an investment of 14 million, 31% regarding the first semester of 22, the previous period. And talking about the second trimester, we invested 6.9 million compared to the previous year. Regarding the number of professionals that we have 65 professionals dedicated to research and development, and so from that 39 with an exclusive dedication to these projects. Regarding the main regulations and targets, we received 6 recommendations of new biologicals use targets, and recently we had the approval from the Agricultural Minister and IBAMA. We are waiting this register of new microbiological pesticides to control a plague that's very important, with the white fly that gives damage to the harvest in Brazil. Now I give the floor to Alexandre again. Regarding our performance in the stock market, we are still having a evaluation of our IPO and a positive performance in IBOV on the same period. We had an average amount in similar levels than the previous year, but we have an improvement. We had a new approbation of another plan. The initial plan is 2 million of stocks, and we executed some of that, and we approved a new plan in this level again of 2 million of stocks shares that's going to be reported according to the convenience. And we have the change to Bradesco to BTG. And now we are going to start the Q&A session. Now we are going to have the Q&A in session to investor and analysts. So please click raise the hand button or the chat box and write your questions. Now our first question comes from Gabriel Barra, an analyst from Citibank. Hello, Alexandre and Wilson, Thiago. Thank you. I'll take my question here. The first one is about the issue about sales. We have seen in the whole sector this delay of the order portfolio, and I think that the big doubt is how that's going to increase in the second semester, because the second semester is so representative. I would like to hear something. You mentioned some more points, but I would like to hear the details, how you are seeing this evolution in the last month. In August, I would like to know how this portfolio evolution, thinking about amount in an overview. What's the perspective in the rest of the year if we can, if you could, a recovery of the amount. And the second point that has to do with that, it's about the margin. Let's say that since we have this IPO movement in the sector, we are seeing the inputs coming, the seeds and the other things. So it's the first year that we are having seeing a scenario that's a little bit different. So the point is to try to understand how works the margin dynamic of this fall of price. You have a percentage of margin that's stable. The cash flow generation with the company would decrease in volume, in reals by volume. So if you could talk about this margin dynamic, if you think about the margin for this year, how much you could have of defense in this margin in this lower price scenario. Good morning, Gabriel. Talking about the first point of commercialization, we always have in agro the smaller first semester, and then we have something more robust on the second semester. This year is a very atypical year. We had several factors, the prices, the politics issue. So the market was afraid, and the farmer will try to seek the best results possible to have the best results. What we see, talking about Vittia, what's important, we came in the latest year doing this work that's necessary to conquer clients and the perception of the technology. And this year of 23, we had a lot of things based on this sense: new clients, big groups, a clear perception of farmer, the great efficiency of the biological products. We have 42 commercial areas with 100% to control plagues and disease with biological products with positive results. Had a lower the Vittia is doing its work in a very intense way, and we are showing that in our distributor scenario and our final clients, the farmers. And so a very important point that I highlighted, we have July and August with a higher intensity of order. We increased 60% regarding the last year, and we have a plan, a budget. It's a challenge one, but we understand that we are capable to reach that, to achieve that. And an important point, it's you talking about this atypical issue that's happening. We are going to have a very strong trimester than the first and second trimester, and we have a relevant loss. I don't think that in the next trimester we could rebate that. We have the very clear with this delay and this way that the market's being conducted. We had a strong complement in what we want to do, and we are going to have that showed in the fourth trimester. It's normal, that scenario. And when you talk about margin, when you have a margin in over about a price that has a lot of demand, we have a better result. But we have an expectation to bring this result to Vittia. We have 2 points that are relevant to increase the volume, what we are working on, and the other one is the mix. So when we invert the mix, we would have a very interesting margin in the company. That's what I would like to clarify for you. Just make a comment and to clarify some messages, we have a reversion from what we saw in the second tree and the entrance of orders, but the invoice, and that's other thing. It's increasing step by step. So the third trimester is going to be good, but we will have an EBITDA increasing accumulated. We hope that the last trimester we would have a strong trimester linked to EBITDA, so we have an increasing in the results of the company. So that's the issue of because regarding the seasons, and the margin issue in our scenario, our expectation that we have a better margin than the last year, and that's because of the mixed issue. The biological are keeping the margin, and what I've been said is that what had a decrease of price are the ones that it's had the highest price. We did not have any readjustments of price that's relevant in the last year. So it would not took to this return movement in the basic pesticide as it happened in the basic pesticides. So what we see is a prejudice in have a lower price linked to our lines that we called about commodity margins, and then we have a perspective to close the year with something worse than the beginning, and we do not hope to achieve our budget. But in the biological and foliar line, our expectation will be that we have margin similar to last year, and then we present some growth. Very clear. Thank you very much. Our next question comes from Mr. Fonseca, an XP analyst. Please unmute. remember that basically 50% of our operation are been doing with the farmers. So we suffer a little less with this issue in the distribution sector. And I think that another point to reinforce the distribution issue, Vittia as a policy, that's a little bit difference in the distribution process. The is a company that do not gives exclusive, so we can have easy movimentation in this sense. So what I can say is that in this difficult moment of the distribution sector, Vittia has tranquility because of its position in the market, working with the farmers. Great, Wilson, thank you. Our next question comes from Ricardo Viana, an analyst from VITT3. The decrease of margin in the foliar pesticides is an issue of the decrease of price, or is it an issue of scale this economy in the nutri volume? So if we report the foliar line pesticides along with the industrial products, so 90% from what we see, in fact, it's an impact of the decrease of margin of the industrial lines, commodities, products with no difference that suffered with this volatility, similar to the dynamic of the basic pesticide, fertilizer, sorry. And foliars, when we take a look on that, it's a little bit lower than the last year. And I would say that that's because of the dilution of fixed cost. So we do not hope if for this year, we do not report in a separate way, but taking a look at the foliar line, we do not hope to have a decrease of percentile margin. And as I said, we hope to deliver at the end of the year nominal growth in the foliar lines. But the industrial line, what happened, and I think that's very common, we had a stock turn to expensive price at the end of the year, not only us, but the whole market. So we had a market basically trying to finish the stocks. It's not our goal, so we're not to end our stocks with prejudice on the industrial line. So we have a very low profit. It was a issue of a margin that is not our goal. Our goal line in the fertilizer to deliver. That's going to show up in the second semester, because in this trimester, we do not sell foliar products. It's very, and foliars in the second semester will have a representativeness that's higher regarding the industrial ones. So we are not hoping a big impact of the decrease of margin. So we will have a very similar one to the previous year, and a little growth in the line of foliars. Our next question comes from Mr. Luis Guilherme, investor. Good morning. When we will have a normality of mineral, and what's the pattern of this in the short and long term? Before this issue of the basic goods. And this big start of, and because of the war, we saw in our operation and other organ minerals operation a gross margin between 20-25% and an EBITDA margin 10-15%, depending on each company and the efficiency. And that's what we saw before we bought Vittoria. Taking a look at the price that we can do, that's what we imagine. This Palomar is inside a normalized operation. We are hoping for several semesters. We hope to see a reversion of that and see that normalized to complement this issue. We work with organic minerals for a long time. We have the city Serrano, and this is exactly what Friso mentioned. We have this margin of from 10-15%. So we are excited to have the acquisition of Vittoria. It's a very famous market. It's very well perceived by the farmers. But when we join Vittoria, it's a higher scale to the one that we have in Serrano City. We took something that's the opposite. We have the first year where the market had its growth. We had some deficiency in the supply issue. We do not have a good plan for that. We were took by surprise. We had orders and we bought the raw materials. We had some problems of communication. Then in 22, we solved to have a something more adjust. And we still were took by surprise regarding where we had closed business, raw materials that we bought, and we didn't have the clients paying for the orders. That happened with several companies of this sector. And now in 23, we entered, as I mentioned, we are well adjusted in the raw materials. We had an accident of raw materials that are very expensive, and we did our work to clean this business. And we understand that's the process that you want to be fast, and it's ending. I think in the next year, we'll have a better structure and we are going to normalize this market. It's harder to give excuse to you. I don't like that. And I don't want you to see that, but we are going to try to reverse this picture and we are going to have that normalized. So if you would like to make questions, click on raise hand or in the chat box. Once again, if you would like to make any questions, click on the raise hands button or in the chat box. There's no further questions, so I end the Q&A session. We'd like to give the floor to Mr. Romanini to make the final comments. Once again, good morning. What we can say in a very clear way, agri is basically, I'm working with that for 30 years, is a market that has a very intensive dynamic, but it's a market that's really making our country to have a position that's more comfortable. Agri is going to grow, Vittia is going to grow, and the companies that are in the sector that are working in a way that's correct, well, existing well in the market. And we know that some problems that we could have are something that's natural, but we cannot do in our company. Vittia, it's a committed company with the investor. It's a company that would like to deliver performance, and we are going to have problems, but we are going to solve that. And we are going to have a great history. I'm in a position of tranquility with this year of 23. That's what I'd like to say to you. Thank you very much. So this video conference is closed. We are available to answer further questions. Thank you all for your participation and have a good day.